Welcome back, everyone. Next, we have Nova Minerals Limited. It trades on the NASDAQ under the symbol NVA and on the ASX under the symbol NVA. It's a gold and critical minerals exploration and development company focused on advancing the Gold and Critical Minerals Project. Happy to welcome CEO and Executive Director Christopher Gerteisen. Welcome to the conference, Chris.
Great to be with you today. And that's right. Yeah. So the flagship operation for Nova Minerals is the Estelle Gold and Critical Minerals Project here in Alaska, where we are not only advancing gold, but critical minerals. And the biggest one there is antimony that's drawing so much interest. And we're really pushing forward here. At a glance, it's a very large project. 200 square miles with, to date, we've defined almost 10 million ounces across the project and across two deposits. Corbell up north, which is a bulk tonnage system, and what's really become the jewel in the crown down south at RPM, very high grade deposit there. In addition to that, 20 other known prospects at various stages of advancement where we not only discovered gold, but copper, silver, and some of these other critical elements, namely antimony is the big one, and one of the prospects we're really focusing on there to get going is the stibium prospect. So we'll go into a bit more detail of those as we move forward here. So as I said, the Estelle project is gold and antimony, and this is the perfect project. We're in the right place at the right time with the right commodities. Both of these, gold and antimony, are at historic high prices and rapidly moving higher. And we think we're in bull markets in both of those. So we're just at the beginning of a bull market. So we're poised to take advantage of that here at Nova Minerals. In Alaska, the Tintina Gold Belt, this has been one of the most prolific belts in recent decades, particularly for gold, but other elements as well. And we're just on the southern end of that belt there with the Estelle project, South Central Alaska. And then now we're zooming in to the project. We're looking east towards Anchorage. First thing to note is we're all on state land here. So there's no federal land, no native corporation land to contend with. This is all state land. That includes the project as well as the infrastructure you see here on the screen. In terms of the infrastructure, so important with these projects, we have a 4,000 foot plus airstrip on the site. We support the project year round. That pink line is our winter road, which we support the project. It is seasonal. Do a lot of heavy freight haul along that road. Now the red line is the West Susitna Access Road project. That's a state-funded project, whole economic corridor through there. We're just one of many beneficiaries, and that's coming online. They're looking to break ground on that road here in this year. This year, it's fully funded and part of the DOT program here in the state. Now, in terms of power, lots of options there. The blue line is the proposed gas pipeline heading out to the Barracks Donlin project to the west of us. So that'll pass about 10 to 12 miles to the north of us, potential offtake there. Also, we looked at our own transmission line. That's the yellow line on the screen. And interestingly, along that route, there's also a coal project, which is gaining, they're moving forward with that every year. And so that would take the transmission line down to 25 miles. Very cost-effective solution. And then there's also micro-nuclear reactors, big push for that in the state of Alaska. And of course, for our startup scenario, we're just looking at diesel generators, which is how most of these mines do it, to start up diesel generators to get going and then grow ourselves into some of these other power options as we move forward. The project's a 35-kilometer long mineralized intrusive corridor. We've been focused on 6 main areas. The red circles are where we've been focused on the gold, and then the blue is where we've been focused on the antimony and gold there at Styx and Stibium. So here in terms of the gold at Corbell and RPM, of course, this is where we have our resources defined, that almost 10 million ounces of a global resource to date. And then the blue circles are where we've been focusing on the antimony. And we have antimony at numerous prospects. You can see the blue stars there, but those are the main areas of focus, Stibium and Styx for the antimony. Now, in terms of development of the project, we're moving forward rapidly here, and we're really focused on the gold side at RPM for a starter mine at RPM. This is the lowest CapEx option, very high margin material there, right on the surface we can get into straight away, and we're working on a feasibility study on that as we speak. Zooming into RPM, you can see here to date, we've defined three main zones there, north, south, and valley. And what you're looking at is the drilling that we've completed. And our main area that we're really honing in on is that RPM North. You can see here some of the drill results at RPM. These are just spectacular world-class intercepts, some of the best intercepts globally over the last 10 years for sure. Let's just read a couple off here. I always like this one, RPM 005, 400 meters at 3.5 grams per ton, including 132 meters at 10 grams per ton. Like I said, world-class. I could go on and on here. You get the idea why we're so focused on getting RPM started up and start getting the company into cash flow as soon as possible. And that's the area we're focusing on initially, RPM North, where most of that dense, close space drilling is. That's been our main area of focus for our drilling here over the last couple of years. That's our starter pit. And here's our resource. This is the 1 gram per ton cutoff grade shell. And you can see even at that high grade cutoff here at RPM North, it hangs together, very nice, thick, continuous zone. And now we've drilled down into the valley and another one of these high grade zones starting to take shape. Still got a bit of work to do there to infill that and to continue to prove that up. Putting on the 0.3 gram per ton grade shell. Now it really bulks out. And so this is much more aligned to a mining cutoff over the long term. And this what you're looking at is a pit shell at a $2,000 gold price. But you can see that outside of that pit, there's still resources here down at the RPM Valley off to the side here at RPM North. So in the next iteration of this, with a rising gold price, as we continue to infill those areas, these pits will just get larger and deeper, and we'll capture more and more of that resource as we move forward. Here's the resource classification. So most of the resources at RPM North are measured and indicated. Our last resource update over a year ago is 330,000 ounces at over 2 grams per ton there. But you can see that this drilling here is not included in the resource yet, and we intend to do additional drilling this year. So we're really targeting about 500,000 ounces at 2 grams per ton there to get started at RPM. And then the remainder of the deposit still remains inferred. So a bit of work to do there to infill that, prove up those resources, and step out because these zones are wide open and they potentially connect. One of the biggest areas that we're targeting there is between south and the valley, 600 meters of strike length there, potential upside, big volume. Those two connect. All our geological information indicates that those connect, and RPM North and Valley here, these two connect as well. So we continue to step out and infill those areas. Currently, this deposit in total is like 1.1 million ounces. And so we easily see this as a 2-3 million ounce deposit. Just got to get in there and drill it and prove that up. In addition, there's lots of resource upside here at RPM. What you're looking at is our surface sampling from our exploration here at RPM in the area, and what we're seeing there in our next drill targets that we intend to drill this year along the ridge. Here you can see an anomaly here just north of RPM, another one here in the middle, and another one down here on the nose of the ridge. And so those are some of our main targets for drilling this year to hopefully intersect some more of these high-grade pods. Really good potential for that. And then the other sampling, you see that grid sampling down in the valley. So that is just that represents big upside for RPM. What you're seeing is eroded material down in the valley that's coming off RPM North. All that high-grade material coming off RPM North has been eroded down to into the valley and just providing this anomaly here. So that's one of our big targets we intend to drill. You can see when I put on the heat map, it's a 1.7 kilometer strike length of an anomaly over 1 gram per ton in here. And so we intend to drill that. It's already crushed up, eroded material. And so that would be very easy digging to get straight into it if it proves itself up. So we're going to drill that, and it's already half the work's been done for us. It's already been crushed up and milled up for us. So very, very intriguing resource target that we intend to drill this year and start to get an idea what that looks like at depth. And so that's RPM. Of course, we intend as part of our feasibility study to look at a processing plant, a smaller scale, low capex processing plant that is scalable here. And it's quite a straightforward processing flow sheet. We just crush, we mill, we float, then we regrind, and we're getting over 95% recovery there at that in that processing and that metallurgical test work that we've already done at RPM. And that location is ideal not only for RPM, but also this whole south area, which includes the train area. And I'll just take you there now. That's 5 kilometers to the north of RPM here at Train. Numerous targets we're working on, high-grade gold at Train, Prospect proper, 40s, 50s, up to 80 grams per ton here at Train. Then a kilometer to the north of that is the Trumpet Prospect. Same story, up to 132 grams per ton. And here we're really starting to recognize the multi-element potential, silver, copper, antimony, and many of these other critical elements. Over here on the east side, the Shoeshine Prospect, one of the highest rock chips ever, 1,290 grams per ton here at Shoeshine. High-grade gold and multi-element, silver, copper, antimony, and some of these other critical elements. And then on the north side is the Muddy Creek Prospect. This one tends to be gold only, very clean metallurgically, but just spectacular gold here, and up to 90 grams per ton, 127 grams per ton. The soils there, just the soil samples, which are usually just an indicator for target generation, are running over a gram per ton over a 1 kilometer strike length there as well. So very exciting target that we intend to hit with our exploration scout drilling this year and start to establish a third, fourth resource in that Train area. That would then feed into that south area RPM plant site. So that's our intention, to get into RPM, low capex option, high margin, and with that cash flow, grow ourselves into the larger project by scaling up RPM, getting into some of these other prospects we're advancing, and also starting to get into the Corbel deposit up north, which is a bulk tonnage system. And here in the Corbel area, you can see same story, a number of targets we're working on there. But the big one is Corbel, Maine. Huge deposit, 2.5 kilometer strike length, bulk tonnage system. And then a short distance away, we've made a new discovery here at Cathedral. And so just getting started there, but at a minimum, we see another Corbel, Maine taking shape. Back to Corbel, Maine, looking east, long section, 800 million tons at an average grade of 0.3 grams per ton here. But there is a higher grade feeder core that comes through here. And what I mean by that, if you hone in on some of these drill intercepts, 94 meters at a gram, 101 meters at 1.3 grams, 113 meters at a gram. That's very representative of that high grade feeder core. When I put on the 0.5 gram per ton grade shell, that encompasses that core, very continuous down along strike of that deposit. And then the 0.3 gram per ton grade shell, this really bulks out. And so what do we intend to do with this once we grow into it? There is that starter pit, comes right up to the surface, very low strip ratio on this deposit. Almost everything you dig up there is some kind of pay dirt. But we intend to start there and then get into the lower grade portions of the deposit. And our intention there is to take the lowest grade portions and do we're looking at heap leach, and then the medium grade, we're looking at ore sorting. To understand the deposit, there's these high grade veins in there. And with the ore sorting, it just works exceptionally well. We've done quite a bit of test work on that by separating out those high-grade veins. We're seeing a 10-time upgrade, taking 0.4, 0.5 gram material and upgrading it up to 4 to 5 grams per ton. That ore sorting just works exceptionally well. And that's why we include that into our economic resources. Most of the resources here at Corbel area are indicated. These in the green there, in pit in the Corbel main pit, working on this years before we even discovered RPM, and then lots of upside with inferred resources around Corbel, Maine, and Cathedral as well, of course, as we continue to advance that. Oh, here's some rock chips at Corbel, and you can see with these, some of this material is from those high-grade veins, 114 grams per ton, 98 grams per ton, and you can see at those grades how we readily achieve that 10-time upgrade with the ore sorting. That's the material we're separating out with those ore sorters and getting that upgrade. More on the process here. We've done quite a bit of metallurgical test work. Again, straightforward flow sheet, except here we'll be using the ore sorting. So just to lay that out for you, a high grade from the starter pit straight to the mill, and then the lowest grade portions of the deposit off the heap leach pad will classify on medium grade, utilize the ore sorters, focus on maximizing the grade out of those ore sorters. where the accepted portion out of the ore sorter is running 4 to 6 grams per ton off to the mill, and then the reject portion, which will still have some gold in it, off to the heap leach pad. And so very efficient resource extraction, and all straight to the bottom line, of course, maximizing the total gold recovery over the life of mine. So that's Corbell. Then another exploration area that we're working on is the Stony prospect area. Lots of prospects there, high-grade gold and very high-grade multi-element potential. Thousands of grams per ton silver, percents of copper, antimony, many of the other critical elements. Also porphyry copper potential here. Back here at this Wombat here and at West Wing, we're seeing indications of porphyry copper gold mineralization. And so those are very exciting targets, all presenting future upside. We just continue to advance these projects to have decades and decades of mine life as we move forward. Another prospect I'll take you to is the Styx prospect. And I really want to show you this one because we're not only seeing decent gold there, but antimony. This is where we're starting to discover some really good antimony. Massive stibnite on the veining. You can see the percents of antimony up to 50%. Antimony there, and it's really exciting with this critical minerals push and this desire to reestablish and secure U.S. supply chains for antimony. Speaking of antimony, we are pursuing Department of Defense grants. We're quite advanced with that prospect to go after the antimony. In our discussions with the Department of Defense, they see our project playing a major role in bringing that production back to the United States. And one of the first prospects we want to start on with that effort is the Stibium prospect. Here's the surface sampling we've done there at Stibium. Again, massive stibnite. You see the photo here, massive stibnite veining all over the surface, over an 800-meter strike length. Zooming in on that, you can see the rock chip samples and our soil anomaly there, 800 by 400-meter anomaly there. And look at some of the numbers. Again, these are just world-class antimony grades, up to 60% on the surface. That's just that massive stibnite veining that we see. And so we intend to drill this year, all conditional on DoD grants. But as I said, that's quite advanced, and we think that'll be in place for us to really attack this prospect this year. And good gold there as well. You can see the gold numbers there. So it is an antimony gold prospect. So this could be potentially, once we drill this and establish a resource, this could be potentially another significant gold prospect as well. Here's the gold heat map from soils, and it's also coming through to the other side. You can see it's here. This is a ridge line. You see it here, and then it goes through to the other side. So good at all through that mountain there. We're seeing very good gold and antimony. And so with these DoD grants and establishing production back to the United States, there is no U.S. production of antimony currently. It's one of the most highly sought after elements known to man, not only used in all the green tech, clean tech, high tech, it goes on and on, semiconductors, batteries, solar panels, but the Department of Defense has a lot of interest because it's used in all the munitions. And so we're not just talking about mining it here, we're talking about the entire supply chain. They really need a company to take the bull by the horns and establish a state-of-the-art antimony refinery in the United States, and Nova intends to do that, where we start with producing antimony trisulfide, which is basically just the stibnite ore to get for the munitions, and then move into a refinery where we produce all the antimony products, antimony oxide, antimony metal, antimony compounds for semiconductors potentially, with a refinery here in Alaska. And just to note, this is not like a copper gold smelter or copper nickel smelter on hectares of land, multi-billion-dollar projects. You know, for less than $200 million on a few acres of land, you can produce all these antimony products and secure the U.S. supply chain. So we'll be at the center of that. We hope to be. So that's the project. Again, you know, you can see we'll be out here for decades and decades, multiple mining centers, multiple commodities over the next few decades. Here's the flow sheet. We've been through most of this, and you know we've already done all the work. Energy has been spent on extracting the gold, and with the critical elements, what we're working on with the DoD is this back end here. This is the critical minerals extraction plants. We've already crushed it, and on the back end, we can produce critical minerals concentrates like antimony, send that off to a refinery, and then after we've leached the gold out, we can take that waste stream, which usually just goes off to a tailings facility, and divert that into a critical minerals extraction plant. That's how the Chinese do it. That's how they capture the market. And we're bringing this to the United States, and this is what we're working on with the Department of Defense for the development studies and the capital required to put in these critical minerals extraction plants. Not only for antimony, but we also very highly elevated concentrations of bismuth, gallium, scandium, tungsten, and some of these other elements. And so we're looking at those. And as we move forward, we're looking at producing those type of elements as well, because it's the same situation. There's no production in the United States with many of those, or negligible production, and we have no reserves. So moving forward, we'll be establishing the reserves and producing those out of the waste streams at our project here. So here's our larger vision of antimony. And you can see that we have our mines, of course. We'll be mining, and then we'll be concentrating on the site. And we're looking to establish a refinery here at Port Mackenzie. This is a great location, multimodal port, and with Alaska and all their additional antimony potential across the state, with existing mines coming online, historical waste dumps, this creates an incentive for the industry to create that antimony feedstock. Now they have a place we'll have a place to send it, and not only to supply the Department of Defense, but the entire U.S. industrial base here, based here in Alaska. So we'll be at the center of that to bring that production back to the United States. Our timeline, working on our feasibility study for RPM, with additional drilling this year, and our technical studies, metallurgical, environmental studies, and being on state land, the permitting process should be quite straightforward, 12 to 18 months. So we're on track and shooting for somewhere in 2027 to be producing our first production out of that starter pit at RPM, and then growing ourselves into the larger project in 2028 and beyond. Now, in addition to that, depending on DoD grants, of course, there's the antimony quick cash flow opportunity. We have several thousand tons of antimony at that first prospect at 47,000 tons, $1,000 a ton current prices. You can see what a lucrative opportunity is that for the company, and we can get into that in very short order and be producing antimony there by 2026, dependent on the Department of Defense grants, of course, which again are very well advanced, and we're feeling quite positive about that. Here's our team covered. Myself, I've been doing this business for 30 years all around the world. I'm actually from Alaska, so I've come full circle back home again. But my specialty is really taking resource stage projects and bringing them into production. That's what we're trying to achieve here. And then the rest of the team loaded with mining and metallurgical expertise, construction, finance, and like Craig, finance, audited Bank of America, his claim to fame, and then our secret weapon, Mr. Hans Hoffman, our exploration manager, who's been working this ground for about 15 years and pushing these projects forward and making it happen out there. Here's a quick corporate snapshot. So directors and management, we hold a sizable portion, about 7% of the company, always participated in the capital raisings along the way. Got lots of skin in the game. Our main institutional holder, Nabari Gold Fund, they're really got involved early on. They're ready to step up with bridge finance, construction finance. They've been a great partner, but they have 12% of the equity. And then the top holders, over 50% by the top holders. Many of those are close associates, family, friends. Very tightly held company, 320 million shares on issue. There are some warrants and options hanging around. Many of these set to expire here soon to clean out the registry. Current market cap, 70 million, $10 million in the bank, US, which is a good war chest as we move into with drilling just around the corner. No debt, debt-free. That's our company. You can see some of these charts. Since it's an exciting time, we just listed on the NASDAQ. So as we get our story out, really a good upward trajectory and good volumes here on the NASDAQ. Now for the shares. Also, this lower chart, you can see that the gold price has been moving up, as we see, almost $3,000 an ounce. But if you look at the index, here's the VanEck Junior Index, still not really catching up. So just for the sector, a big gap there between the gold price and the actual index. So there's a lot of catch up to do there. So both of those things are exciting project, as well as just the secular bull market still has to catch on. That's a big opportunity for the investor moving forward here with NVA. Here's some of the catalysts coming up. These grants, of course, that we're feeling very positive about. The permitting, we already have many of these permits in place, particularly for the initial antimony project, as well as road permits out there, and working on further permitting for mine and infrastructure. The 2025 resource drilling and exploration is coming up. We'll be focused mainly on RPM, but also with our scout rig, some of these other exploration targets to establish additional resource areas and deposits. Technical studies are progressing, metallurgical, environmental, and a resource update, of course. Once we complete our next round of drilling here, we'll be doing resource updates, not only on the gold, of course, but with the first antimony resources there at the Stibium prospect. And then a feasibility study, we're working on that to get that out as soon as possible as well after this next drilling program. Here's some of the value drivers. So we're in a favorable jurisdiction, all the geopolitical sovereign risk around the world these days, being in Alaska, safe jurisdiction, no federal land, no native corporation land to contend with. Really a big bonus for the project. We're an aspiring gold and antimony producer. We're not here to flip this project. That's not part of our core strategy. Myself, like I said, I'm from Alaska, back home, pushing the project day and night in the trenches, moving things forward. Low discovery cost per ounce. Doesn't require deep searching, expensive exploration techniques just yet. Nothing complicated there. It's old school geologist, boots on the ground, keeps our discovery cost down around $5 per ounce. Anything less than $10 in this business is amazing. And so we just see everything right on the surface, just going for that low hanging fruit of open pit, low strip, bulk mineable deposits. And we're seeing these thick, high grade zones right on the surface. Certainly, RPM demonstrates that. Significant resource upside with the additional drilling we have coming, as well as with the antimony and some of these other critical elements. And then it's just it's an attractive valuation. So there's a lot of near-term catalysts that are coming out. The grant, the feasibility study, the drilling, the drilling and field season that's about to start. So very exciting times ahead. Keep us on your radar and watch the news flow there, and continue to follow us. So I'll leave it at that. I think, go to our website. You can find this content and much, much more. Dig a bit deeper. I think you'll find we're on something very special here. So I'll stop it at that. Any questions?
Great job. Yeah, we have a question. Dwayne says, a small retail investor. He's been following Nova for several years, even before antimony and other critical minerals. He thinks you're doing a nice job pivoting. However, with regard to antimony reserves, why do you think Nova is still flying so far under the radar, especially compared to Perpetua?
Interesting. So we're not pivoting. So we're just combining antimony, because the antimony found us. So we're not pivoting from the gold. We're still a gold company. It's just we're adding antimony because it's such a lucrative opportunity, and we're seeing a lot of interest from the Department of Defense. I think Perpetua is much more advanced than we are. I think they've completed their feasibility study, and so. But you can see when you look at Perpetua, I'm glad they brought that up, what the future holds for Nova Minerals. If and when we receive this Department of Defense grant, and there's big urgency to do that, I think people will start to notice Nova Mineral much more. But hey, this is the opportunity for the investor. So if you recognize that, Dwayne, then this could be an opportunity for you and the other listeners as well.
Wonderful. John asks if you're going to start discussions soon with a larger gold mining company to see if you can arrange a JV or similar arrangement.
Well, we are on the radar, and they're knocking on our door. Lots of majors and mid-tier companies, producers. They need a project like this to fill that reserve and that depletion gap that they're getting from their production. So we're on the radar. Some of them getting into our data room. No, to be clear, no official deals on the table, but certainly we'd be open to a strategic partnership like that as we move forward, and more and more people are approaching us.
And can you address how you're handling the burn, and financially, how lean are you running?
So when we're not drilling, we're quite a lean company. Our our monthly expenditure is with the studies going on now, a few $100,000 a month. So when we're not drilling, we could with the $10 million we have in the bank, I mean, we could basically just sit here. We're not that company, but we could just sit here for several years and just tick along. So the burn rate is very low, $200,000 a month. But as we move into the drilling season, we will be increasing that expenditure. But we have about a 15-month runway with the cash we have, and completing all the drilling and projects that we have planned for this year.
Well, wonderful. Chris, we have more questions for you, but we're out of time. We'll send them to you so you can answer on your own. But thank you so much for joining us on the conference.
Thanks for tuning in. Appreciate it.
All right, everyone. We'll be right back.